Hey guys, Jared Wesley here of Live Traders, and it is that time of the week. It is lecture time, and this week's topic, guys, is trend analysis. Uptrends, downtrends, sideways trends, overlapping bar trends, smooth trends, choppy trends. Anything to do with trends is what we're going to talk about today. And you know what? It's a very, very, very important topic, because if you don't know what trend you're in or what trend you're about to be in, you're never going to make money as a trader. And I'm pretty sure all of you people do this to make money. All right. So if you're not sure that this is an uptrend or a downtrend or a sideways trend, that's not good. But more important than that is, if you don't know what's likely to happen next, you're not going to be able to hit your targets, or you maybe keep yourself in a trade or out of a trade, et cetera, and so forth. So if you're in a sideways trend that's about to break out, you might want to get in that. If you're in an uptrend that's about to turn into a downtrend, you might want to get out of that. So we're going to talk about all of that today, because understanding where you are in the trend is one of the single most important parts of good trading. All right. So I'm Jared Wesley of Live Traders. Let's get to it. This week's lecture topic is trend analysis. So I'm piggybacking on the last couple lectures. We're really digging deeper, granular into this topic. So we all know that there are three basic trends: uptrend, downtrend, sideways trend, right? We've known that for a long time. But how a trend forms is very important. Is it a smooth formation? Is it an overlappy formation? And then not only what trend we're in, but the next possible trend. Does that make sense? So it's one thing to know where we are. That's great. But to know where we're going is just as important to know where we are. Okay? Knowing that we're breaking out from a sideways trend into a possible early stage 2 uptrend is very important. Knowing that we're in a stage 2 uptrend that possibly is getting topsy and might move into a stage 3 downtrend, et cetera, and so forth, is also very important. So today we're going to dig a little bit deeper in trend analysis. I did use one or two slides from last week's lecture, but the rest of the slides are all new. This one may be a little bit shorter this week. We'll have to wait and see how wordy and mouthy I get with some of these descriptions and explanations. But first, before we do any of that, we have to get into when will the insanity stop. Little curveball this week on the insanity. Insanity is not only for traders. I was just looking online and I happened to see this picture and I was like, those people are nuts, right? I mean, but it's kind of something that traders would do, right? Does this make sense? So you're like, what does it have to do with trading? It doesn't really have anything to do with trading. The point is, you're not the only crazy people out there. There are lots of crazy people, just not everyone finds the stock market when they're crazy. The point is, I wouldn't do something like this. I don't think so anyway, unless I was strapped in, and I don't know that these people are. How does this relate to trading? Money management is still your number one job, no matter what. So if you're out on a ledge on a picnic table drinking beer, which I'm not sure is the right beverage if you're out on a ledge on a picnic table, okay, put your stop loss in. Okay. If they're tied in, then they have their stop loss in. If they're not tied in, they don't have their stop loss in. That's the lesson to be learned. No matter what you do in trading, if you manage your money properly, you will never be in serious trouble. I'm going to repeat it because it's the most profound thing you will ever hear, ever. If you have proper money management and use stop losses, no matter how bad of a trader you are, you will never be in a bad position. If you're risking $5 per trade and you always take your stop losses, what's the worst you can do? Seriously, you could lose 500 trades in a row and it's still $2,500. That's not enough to destroy your life, right? It may not be pleasant, but it's not enough to destroy your life. And I'll be honest, it would be really hard to lose 500 trades in a row. If you take care of your money and use stop losses, you will never, ever blow up your trading account. You will never be in a position where you can significantly hurt and damage yourself. And that, unfortunately, is where people go wrong in this business. All right? They listen to the hype, whatever, and then they get themselves in big trouble, and then they try to dig themselves out of the hole, and they risk even more money. It's a vicious cycle that leads, unfortunately, to the ruin of many traders. All right? So that's this week's When Will the Insanity Stop? Thought I'd throw a little curveball in there. All right? You guys remember this from last week? Why do markets fall and bounce? I hope so. All right. This happens when the market reaches a significant support level on the way down. Shorts become skeptical. Shorts stop adding to their positions. Shorts begin to cover their positions. Longs slow down their selling, right? They no longer want to exit their positions, okay? Cash money begins to enter the market slowly, and this eventually accelerates, okay? Now, that's how a market bounces, right? Now, yesterday we found out how markets fall because everything that says shorts, longs become skeptical. Longs stop adding to their position, okay? Longs begin to sell. Okay, shorts begin to continue to adding to their positions. Okay, cash money leaves the market, right, or doesn't enter, I should say, because it's not in the market, right. So the point is this is how markets go up and down, but this is the psychology, right, behind markets going up and down. Now we're going to kind of look at the bars. What do the candlesticks look like, right? So during the fall, the market was largely driven by supply, more sellers and buyers, but the supply eventually gets eaten up by demand. Buyers become more interested. And again, yesterday was the exact opposite. Now, keep in mind, guys, you can blame it on many, many things. Oh, the CPI was worse than expected. Well, maybe that's the reason. Maybe it's not the reason. Okay, but for long-term investors, you shouldn't be leaving the market over one CPI report. So a lot of that's just institutional money jockeying for position and HFTs and so on and so forth. Okay, but the point simply is, at the end of the day, waiting for confirmation costs a little, but it also increases your odds. Okay, so then we took a look at this chart. Right, these are the two charts that are the same. After this, they're new. All right, so. Maybe this is actually a different chart than we looked at last week. I think maybe it is. Anyway, if we go to the left here, all right, we have a stock that looks weak. It's chopping around. There's bottoming tails. It's making an effort to hold this area, but then it fails that area. So you see weakness come in, right? Red bar engulfing takes out the green bar, takes out the bottoming tail, goes red, red, red. Small rest, red. But now, what do you start to see? And this is important, okay? Because this doesn't signal that it's the end. Like, there's no one bar generally that signals the end. Yes, it's possible. It's possible you can have one massive turnaround bar and it changes the trend. Yes, but most of the time it doesn't happen over one bar. It happens over a series of bars, okay? So supply is beginning to be created, okay? So you'll take a look here and it's like, supply, 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 supply. There's no demand, right? There's little to no demand over here, okay? And then as you start going lower and lower and lower, what do you start to see? Bottoming tails, red bar, topping tail, bottoming tails, green bar, bottoming tail, bottoming tail, bottoming tail, green bar. What's happening? The momentum is slowing down right here. Right? You're starting to see that tug of war happening. So while supply was hugely in control over here, right? Sellers were in control. Demand was non-existent. People didn't want to buy up stocks. They wanted to get out of stocks here, the longs anyway, right? But over here, you start to see some bottom feeders, people going, maybe the bottom's coming in. I'm going to nibble some. I'm going to nibble some. I'm going to nibble some. And then the stock continues to go lower, but in a much, much slower fashion. So what we're seeing here is a little bit an early balance of power shifting. Then the next day, the stock gaps up and goes dead sideways. Right? Buyers and sellers, and then whoop, big red bar takes out the low. Okay, now, initially, and this is where it's very, very important to put a piece of paper over the future, right? That's basically what you want to do. I do this for you guys from time to time. I'll do it again today. Take a shape and do this. Just cover the future, right? You have no idea what the future holds. Now, I think a reasonable trader would look at this, and once they see the big red bar, they would say, okay, we went kind of sideways here. We're having a tug of war here between buyers and sellers, where demand looks like maybe there's some demand sneaking in here. And then this red bar shatters all the hopes and dreams of the buyers, and everything is about short, 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 seller, 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 seller. Supply is back in full force here. And that's the way most people would look at this. Now, having said that, though, What was one thing you should do before you make a decision to get in this, guys? We talked about it last week and the week before. Okay? Before you look at this big red bar and decide we are going lower come hell or high water and that's what we're doing, what's the one thing you should, well, there's two things you should look at. What are the two things you should look at before you make a decision to jump into this red bar and short the heck out of this stock? What are the one or two things you should be doing? Talk to me. Audience participation today. Wow, you guys are absolutely on point. On fire. Look at you guys. Leo strikes first with the right answer. Higher time frame in market. Other time frames, higher time frames. Look to the left. Average trading range is another good example, Caesar. I didn't think of that, but yes, you are right. Higher time frame in the market. Absolutely. Why? Well, hypothetically, if this is a 5-minute chart, gosh, what does it look like on the 15, on the 30, on the 60? What does it look like? Well, it could look like 4 or 5 bars straight down. It might be 6 bars straight down. Okay, so we should absolutely look at a higher time frame, as well as, good point, Caesar, the average trading range, as well as what the market is doing. Because this might actually be a wide range ending bar on a lower time frame and not an igniting bar. And we don't know that unless or until we look at the higher time frame. Okay, and then as we peel the onion back, we can start to see here. This is what happens next, right? Buyers step up in a big way. Buyers come in and you're like, all right, it's just a small resting bar topping tail. You're not thinking much of that bar. You're actually thinking that's probably shortable. Great. But then this bar comes in. And once you see this bar, your opinion has to immediately change, right? It has to change immediately. Why? Because the depth and level of retracement from this green bar to this big red bar is about 80%. That is not a sign of weakness. And then what confirms it for you? Guys, let me ask you a question because you guys are so on point today. Do you see this bottoming tail bar right there by my cursor? What does that look like on a lower time frame? Tell me. Tell me what it looks like on a lower time frame. If you were to drill down to a 1 minute or a 2 minute or whatever, what does it look like on a lower time frame? Thank you, Chris. Yes, it looks like a pivot buy setup. On a lower time frame, it likely looks like a pivot buy setup, right? That's a big bottoming tail, most likely, especially if it formed over 5 bars. It would be red bar, red bar, red bar, green bar, green bar. Let's imagine this is a 5-minute chart and we're drilling down to a 1 minute. Of course, we don't know for sure. That's why I said most likely. What does it look like? It probably looks like red bar, red bar, red bar, green bar, green bar. Well, that is not at all what you want to see, right? It's not at all what you want to see. Because now what do you have on a lower time frame? You have a higher pivot low. A higher low is what you have. And the level and depth of retracement not only gives you a higher low, it takes out this entire bar, about 100% of that red bar. So now, yes, it took 3 bars to do so, but this red bar is now gone. Any selling pressure, any supply that existed in this red bar is no longer there. It's gone. And we know it even more so because if you drill down, you see the bottoming tail. It's one thing, right? Again, I should have done this on here. I really would like to draw you a picture. But imagine this wide range green bar is 5 green bars up. And this bottoming tail is 3 red bars down and then 2 green bars up. Oh my gosh. You're looking at something that's changing trend in a micro time frame. It hasn't changed the trend. It's changing the trend, okay? And then it continues this move back up, and what happens? The higher we go up, the more and more likely buyers are in control and demand is here to stay. But we are not Nostradamus, and we do not know the future, and then what happens? Right, you're coming over here. Hold on, let me pull this over just about there. Sorry, okay? So now we have this pivot right here, kind of near a little bit of junk to the left, and we chop around, pull back, bottoming tail, buyers are stepping up. Bottoming tail is completely engulfed by a red bar, a definite sign of weakness, but then you have bottoming tail, doji bar, bottoming tail. Here's the problem. What problem do you guys see for this move back up? What's the issue you see? If you're looking seriously at trying to maybe buy this, what's the problem you see? Chris is on point today, on fire. Kids talking fire today. Yeah, it's overlappy and sloppy. It's just very, very indecisive to the left, right? So when you look at this, you're going, she loves me not. She loves me bottoming tail, she loves me not red bar. She loves me bottoming tail, she's not sure today doji bar. She loves me bottoming tail, she really loves me green bar, and then we go red bar. There's too much overlap here, too much supply. The supply has not been transferred yet. So let's move this off and take a look at the whole thing now. I'll just move it over there just in case I need it. Okay, so now we look over here and what happens? Green bar comes in, topping tail comes in, and then slap, pap, pap. So a deep retracement into supply, but it could not follow through equals renewed weakness, right? So when you look at the trend line, you look at everything that's going on, you look at the bottoming tails, the topping tails, the tug of war battle, the buyers had a moment of hope, a glimpse of glory over here, and then it pulls back sloppily. They're still fighting on the pullback, cannot bounce. Boom. Drops under here with a big red bar, another big red bar. I mean, huge, huge weakness here. And then we go into a sloppy period again. Okay? A correction through time after a large drop implies there is still a lot of overhead supply. Right? So moving back up here is going to be a challenge because all this is sloppy. Right? It's sloppy over here to the left where my cursor is, right? It's sloppy over there. It's sloppy in the middle of the slide here. And that means if this stock breaks above the red line, it's going to deal with a lot of sloppy crap over here too. All right? You might be able to get back up into where my cursor is sitting without too much trouble. Maybe. But then you're going to deal with all this junk to the left. This stock has generally showed weakness. And if you drew a trend line on this bad boy, it's holding the trend line, right? So if we were to take this, and I'll draw it over top, okay? You're going to draw a trend line here. We're holding that down trend line, aren't we? We're holding it. We're holding it, we're holding it, we're holding it, we're holding it. There's only one opinion you can have about this chart. Supply is winning. Sellers are in control. There is not significant enough demand here to get serious about going long on this stock. Now, one more comment before I move on. This doesn't necessarily mean you can short it either, because you have to look at the higher time frame, bigger picture, what's to the left over here on the higher time frame. It looks like a good short. It does. It looks like a good short. But you still need more information to short it under this green bar. But guys, why did I spend so much time on it? I spent so much time on this slide because that, in my opinion, is how you all need to be reviewing your trades at the end of the day. I have a feeling many of you spend about 30 seconds when you look at the chart of the trade that you're in. Oh yeah, it looks like a 3-bar play. Okay, it's pretty good. Yeah, it didn't work. Oh well. Oh, it did work great. Next. No. I want you to really think through your charts. I want you to take a piece of paper and go bar by bar. And I want you to see what you predicted going forward. Did it actually happen? And if so, why or why not? Was there something external? Was there an external force like market conditions changed? You didn't look at the higher time frame. This is how you get really, really good at chart reading. You do it over and over and over and over and over again. Yes, it's tedious and it can be very annoying and boring at times, but it's very helpful and educational. Okay? So now, same thing. So now we have a stock all the way on the left-hand side. Okay? Let's see something real quick. That is so strange. All right. Anyway, all the way on the left-hand side. Stock looks like it's bouncing, does 100% retracement, pops back up, pulls back, and then right here, okay, significant turnaround bar. The answer is yes. This is a significant turnaround bar. Why? Because it not only takes out the red bar, it takes out the second red bar and does about a 90% retracement to this prior pivot high. Okay? So when you take a look at this, snapshot failing and winning charts for review on weekends helps a lot. Yes, I completely agree. Absolutely. And guys, it just takes time. That's all. It takes time and effort and a wanting and willingness to do it. You have to want to do it. Yes, even the tedious stuff you have to want to do. So back to this bar, significant. TB stands for turnaround bar, okay? So this bar takes out the red bar, takes out the second red bar, and has a 90% retracement. Level and depth of retracement into prior resistance areas matters. The level and depth matters. We'll talk about it in more detail later. So now that this big green bar happened, the likelihood that this prior pivot will be broken and this pivot high will be tested has increased exponentially significantly. The fact that this pivot here has been dealt with or 90% penetrated means this next pivot is probably going to be breached. Not necessarily breached, but at least reached. Okay? Then we go green bar, green bar, green bar, topping tail. Why? Because sellers came in over here. Expect sellers to come in again. Green bar, red bar, green bar. What are we fighting? We're fighting an extended move, right? We're fighting a stock that's up 1, 2, 3, 4 bars. It does not mean, I'm going to be very clear here. This little tug of war right here does not equate to bearishness. It's simply a stock that's a little bit tired and needs some rest. We'll know the level of bearishness once we know the level and depth of, say the word, say it for me. We'll know the level of bearishness after we find out the level and depth of fill in the blank. Wow. We don't need anyone else. We just need Chris today. Retracement. That's it. Once we find out the level and depth of retracement, then we'll have a much better understanding of just how strong or weak this is. We know the stock has strength because it just broke this pivot high down here. And it just broke this pivot high up here. So we already know there's some strength here. How much strength? Well, we'll find out when we put in our first higher high. Higher low. We'll find out when we put in our first higher low. But I don't want a higher low on an 80% retracement. I want a higher low on like a 40% retracement. What do we get? A higher low on about a 30 to 40% retracement. It's exactly what you want to see. Okay, now, this is a significant higher low, HL, higher low. But does that mean we can buy it? That's tough. That's a challenge. Because this was a bit of a sloppy, overlappy pullback. There's not a lot of room to the prior pivot. But I do love that we broke 2 pivot highs and we put in a higher low. So you're definitely tempting me. But I'd probably hold off. Probably, okay? But you're definitely tempting me, okay? So now, bearish candles quickly overcome equals bulls in control. I want you to take a look at these 3 candles that I have arrows on. Red candle here, red candle here, red candle here, okay? Bearish candles, all 3 of them. And they were quickly overcome, which means the bulls are more likely to be in control. The bulls are in more control. Why? Because the bears couldn't consolidate their weakness. Does that make sense? It's kind of like, I don't know if this is a good analogy or not for you. I watch drag racing a lot, so which means none of you are paying attention right now, okay? You can't just set a national record. You have to back up the record within like 5% or something like that, or within 1%, because it could have just been a fluke. Right? You could have just gone fast for 1 run and been lucky. You have to back it up. Well, the same thing here. You can't just have 1 red bar and say, oh my gosh, look at the weakness. Back it up with another red bar or another red bar. But they couldn't. All 3 of these red bars got bought up. So now what we have, okay, is what? Demand is increasing because now we have multiple higher highs. We have a higher high right here. We have a higher high right here. And we also have a higher high right here. We also now have a higher low right here. where it says significant higher low. And we also have support tested and held. That's another higher low. We are now officially in an uptrend. We have 2 higher highs and 2 higher lows. This is a buyable breakout. But note, it still gets tested. This is why we give our trades room, because these areas, even though this is a reasonable breakout to buy it right here, buy it over that area, red bar comes in, computers are really good, whatever, it tests the low and then rips. How are you feeling now? If you're not using an 84% play, you just sat there and watched the computer take all your money, literally snatch the bag right out of your hand by a penny, and then rip. There's no fun in that, okay? Oh, Derek, at least there's one person in here. Good, right? Don't worry. The other 99% don't. I'm kidding. So, point being is, we're looking at trend analysis here. We just saw a stock basically change trend. And we saw it by higher highs and higher lows, significant turnaround bars, significant higher lows, okay? Support being tested, leaving bottoming tails and going higher, and it continues this way. Now, let's do the next part of this. What happens after we're in the uptrend? Well, now we have to look at, when will the trend likely end? That's the next question. Now that we know we're in an uptrend, when might it end? Well, we continue to move up. We pull back. That's fine. We pull up. Uh-oh. This is the first sign of trouble. Give me the 2 signs that I'm talking about. They're on the screen, so you better get it. I literally put them on the slide, okay? What are the 2 things I'm referring to here? What the first things I'm thinking about going, this trend is in trouble. Doesn't mean it's over, it just means it's in trouble, okay? Lower high, double top, yeah, there it is. Thanks, Sophia, thank you. I'm just kidding. Double top, right? Lower high / double top, and the trend line is broken, right? Once you fail to put in a new high, and you break the trend line on the pullback, right? So the pivot and trend line are broken. So we have a lower high, breakage of the trend line, and third, this area right here, this pivot was broken. So there's technically 3 things there. Failure to put in a new high or lower high, whatever you want to call it. We broke the pink line, which is the trend line, and we put in a lower pivot low. Now I'm very, very skeptical about this trend. If I were trading this, my stop loss would be on that pivot right there where my cursor is. That's where my stop loss would be. That plus a few pennies, right? And it gets broken and you're out. You're like, okay, well, I got a decent amount of the move. And then we chop around and we retest the high one more time. So now the question becomes, what's the bias now? Whew. What's the bias now? That is a question I am looking for an answer for. I'm asking for an answer for this. What is the bias now? Higher, lower, sideways? Got to be tested once in a while. Can't just get easy questions, right? PS says bearish. Dean says bearish. Sophia says neutral. Firecap short. Sideways. Distribution. I like the answer. Stage 3 going to stage 4. Sideways. Triple top. Not long the move. Possibly over. Yes, 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 and almost all yeses. I agree with you. So, what's the action stage? What's the action event here? Buy it, short it, sit on hands it. What's the action event? Buy it, short it, sit on hands. Talk to me. Okay. Sit on hands, sit on hands, sit on hands, sit on hands. See, I like it when you guys pay attention. That's right. Exactly right. Sit on hands. Wait and let the chart give you a reason. And right now there are no reasons to buy this. There are no reasons to short it. There's support below at 38.30. There are 2 retests, not one test, 2 retests, so a triple top. And while I agree this is a smooth pullback, you're buying it into a triple top. That's tough. If you're like a micro scalper, super duper micro scalper, maybe you can shoot for 1R and trade that. But generally, for 99% of traders, this is a non-action event. This is a sit on hands event. Sit around, let it break 38.70, let it break 38.30, but let it do something other than what it's doing now. That's it. No direction, no trade. Exactly right, Christian. This is what we're doing. Now, it sounds so obvious and easy because we're sitting here on a Wednesday afternoon chit-chatting and it's great. But what if you lost money on this trade or a previous trade and you're down 1R or 2R and the market's starting to go green and you see this green bar coming in? Some of you would take that. Some of you would take it and go, well, I'll just get out at 38.70. But look at all the slop in this whole area. It's a range. It may go to 38.90. It may go to 38.50. It may not go anywhere. It's not worth it. Like there really, really, really aren't any good reasons to take this, right? It absolutely looks like a stage 3. It could end up being a stage 2 pause that refreshes, but it absolutely looks like a stage 3, which means you can't take it. You're going to sit around and you're going to wait. But I am impressed. You guys all got it right. Okay, now, man, I was like, this is going to be a quicker lecture. It's probably going to be a longer lecture. Now what do we have? We have 2 sideways trends, but they are not the same. Just because they're sideways doesn't mean they're the same. So, on the left, I've already given you the answer to make it easy for you. Untradable sideways trend because there are fewer overlapping bars. Did I say fewer? Not fewer. More overlapping bars, okay? That's what I meant to say. Glad we changed that. Untradable sideways trends because there are more overlapping bars. Take a look at this. It's clearly in a range, like we can see that. That's not the problem, okay? And you're sitting here you're going, oh my goodness. There's bottoming tails, there's topping tails, there's doji bars, there's wide range bars. This is so hideous. You wouldn't even look at it. It's like an Elephant Man chart, okay? It's just slop. Stay away. Stay away. Now, some people over here might be tempted, right? Bottoming tail here, green bar here, gap up. Stay away. Stay away. Remember, support and resistance is an area. It's not one single penny. It's not the penny at the top of the range. It's everywhere in here. Whereas if I look to the right, it's tradable, sideways trend, right? Because there are fewer overlapping bars. Now, I am not suggesting that this is the world's greatest sideways chart on the right. That's not what I'm saying. But when you compare it to the left, it's a much nicer chart, right? Here you have at least red bar, red bar, red bar, red bar. Big wide range bars create void on the way back up. Over to the left, there's a lot of overlapping bars, right? But these 4 red bars, 5 red bars create the void back up. Stock moves back up, but then you get this hiccup. So this pullback is not quite as good because you have some of this junk to the left. You pop and fail. So I'm not sure that I would take this second pullback. The first one, not bad. The second one, I'm not so sure. My general rule, guys, my general rule, I just wait for them to break above the red line at the top or below the green line at the bottom. Why? There's thousands of other stocks to choose from. Why do you have to trade this? It's such a profound statement that I don't know why more traders don't consider it. Why this stock? Ask yourself that on every single trade. Why this stock? When there are thousands of others to choose from, is this the absolute best that I can trade? Or is it just a FOMO thing? Fear of missing out on something. Okay? Point is sideways trends are challenging to trade. Generally wait for the breakout above this area. Buy the first pullback, buy the breakout. Okay? And remember, PTS students, just because it breaks above the red line doesn't make it a buyable breakout. It's just a breakout. It might be a buyable breakout with a suitable, adequate resting period, but just because it breaks above support or below resistance, above resistance, below support, doesn't automatically make it buyable. Okay? think about it every time you take a trade. Is this the best thing that I can find? Why am I so jonesed up to take this trade? Do I have a reason to be? Because you should always be looking for the reasons not to take a trade, not the reasons to take it. And when you run out of reasons not to, then you take the trade. All right, this is the chart I think we saw last week. Okay, so I'm not going to spend as much time on this. All right, stock moved lower. We talked about the bar by bar analysis in different time frames. And that's all I want you to see here because we already talked about it last week. All right, I'm talking less about the trend and more about drilling down to the bars so that you could understand what's happening inside. We talked about that on the first slide we looked at today, right? This turnaround bar right there, this is a trend changing event because it's not just a turnaround bar on the left, it's a turnaround bar followed by a bottoming tail, or I should say it happens after the bottoming tail. So the first sign, bottoming tail. Next sign, big turnaround bar, big green bar. See it over here? The 5 minute turns the 1 minute, and there you go. Now we have a short-term trend change. It doesn't mean that this stock is now magically in a stage 2 on the daily. It's just saying this is how stocks transition. This is a 1 minute chart that's in a stage 4 downtrend, does a double, triple, stage 1 triple bottom back into an early stage 2 uptrend, all on a 1 minute chart. This is a 1 minute transition, a 1 minute micro cycle, stage 4, stage 1, stage 2. That's how it happens. You can see it on the slightly higher time frame, but you can drill down to possibly get a better entry, or at least get a better understanding. And this is why, and I don't know if you guys pay attention or not, you seem like you do. When I say something, I am usually right about the stock. When I say, guys, it's over for us on mRNA if it breaks this area. And yesterday on Tesla, I said, it's over for us, guys, if it breaks this area. And then I'll say the opposite. Hey, if we can get above this point, we'll likely hit target. Why? Because I'm looking at the 1 and the 2 minute chart as I'm looking at the 5 and the 15. And I'm drilling down and going, looking, wow, look at that bottoming tail on the 1 minute. If we break below that bottoming tail on the 1 minute, there's no way the stock is going to hold. It's going to go lower. So that's where I'm getting that information from. So earlier today when I said to you guys, if mRNA breaks 137.40, it's over for us. Sure as shit, I was right. And then later on it bounced. But at that moment in time, it's right. Because I'm looking down, I'm drilling down, I'm going, wow, if we do break that pivot, right? Just like PTS says, the failure of the 2 minute sell setup, the failure of the 2 minute sell setup confirms the 15 minute buy setup. That's why you use multiple time frames. So now we're using trend analysis, but we're also using bar by bar analysis inside of the trend analysis to help us get a better understanding, an earlier understanding of when a stock might actually change trends. It all comes together, which is why we've spent 3 lectures in a row talking about it. Okay? Now, look at something a little different. Same but different. Okay? So now, angle of correction or retracement is important. Depth of correction or retracement is important. Significance of the new high is important. These are all topics that we have talked about in the past. But I think this chart does a very nice job of illustrating what we're talking about. So we have a stock that clearly to the left was in a downtrend. We know it because of the moving average, the declining moving average here. Okay. Then we pull back, and then we get this kind of pseudo stage 1, like micro stage 1. Why? Look at it. Capitulation. Nobody cares. Doji, and then bottoming tail, rip. So now we break above this area. We go sideways, but there's a subtle pullback here. That red line is the pullback, but look at the angle of the pullback. The angle of that pullback suggests who's in control, guys. You have a 50-50 chance of getting this right. The angle of that red bar suggests who's in control. Who's in control? Crickets. Thank you. Yes. The bulls, the buyers. Buyers are clearly in control. Because if the sellers are unable to make an impression on the buyers, then we know the buyers are in control. How do I know they're unable to make an impression? Because it has equal lows, okay? And the pullback, look at the angle of the pullback. There's almost flat, right? It's almost a consolidation. right? And the lows are equal. There's no lower lows here. And the pullback, if you even want to call it a pullback, is very, very subtle. Yeah, it's a nice breakout, right, PS? It's a nice breakout. So then this is a buyable breakout right here on this green bar. Put your stop down here, okay? Then we rip higher right there. We get a pullback, lower high, lower high, lower high. I don't like this topping tail. I'm not going to lie. I don't like that topping tail. But it did hold the moving average. It did hold the green line. So that's still bullish. Now, would I buy or add on this pullback? Probably not, because that topping tail is a concern. So I don't know if I would buy or add, but the general sentiment is bullish. I'm above the moving average. I'm above the support area below me. Okay, fine. Stock gaps up, goes much higher, pulls back, still above the green line, above the moving average. Angle of retracement, okay? Not bad, right? You have that kind of a 45-ish degree angle, maybe less, a little less than 45. Again, a challenging buy because there is some overlap, but the trend is pretty obvious here. We're still in an uptrend. Two big green bars, pull back, nice angle of retracement. But what's happening now? There are three things here that you need to see on this chart, and I'm going to ask them before I explain them. As we look at the last three pivots, the last 2 to 3 pivots, what are the three things that should start concerning you? It's happening. It hasn't happened. It's happening. It's in progress. There are three things that should bug you about this, that should concern you and worry you. What are the three things that should concern you and worry you here? Okay? I'll give you a moment to think about it. There are three things. Too much overlap, too deep retracement, and breaking trend line. Okay, below the MA, doji, retracement. Angle of a pullback is increasing. Very good. Below the moving average. Very good. There's one thing here that you guys are missing. Maybe someone has it, and I may have missed it. Hold on, let me see. Retracement, breaking the trend line. Okay, so you guys are all right, okay, about the angles of retracement are getting steeper. That's absolutely true. Breaking of the moving average and or the trend line. Absolutely true, right? So I mean, when you sit here and let's make one, okay? It's always good to do. We draw our trend line. This is give or take where we're at. Let's change the color of that and let's make it, I don't know, let's make it pink and let's make it much bigger. Okay? I don't know if pink's the right color for that. Orange. Okay. So, you're right. The angle of retracement below the trend line, below the moving average, lovely, wonderful, wonderful. Oh, there we go. Now you guys are stepping up. There it is. There it is. There it is. New high is not strong, says Fernando. The small break of a new high, says Jordan C. Yes, yes. That's the third thing I was looking at. Okay? So the first thing I was looking at is the angles of the retracement are definitely getting steeper. It's almost like it's about to flip over, right? The breaking of the moving average and or the trend line is the second thing I was looking at. And then weak new highs. Look at the new high here. Now look at this high. Now look at this high. Okay? Down here, okay, where you have the breakout over here to the left, the breakout to the next pivot high is significant. This pivot high to this pivot high is significant, okay? But then this pivot high up to this pivot high is less significant, and this pivot high up to the top is less significant. Those are concerns. The momentum is waning. Demand is waning, okay? Sellers are creeping. The angles of retracements are getting steeper and steeper and steeper, okay? So this is how you need to read a chart. So buy setups after steep and deep retracements are trouble. stay away from them. This last buy setup, you better stay away. That's like a 90% retracement after kind of a pseudo double top, and the angle is too steep. You guys ask me this all the time in the chat room, and I'll say, no, the angle of retracement's too steep there. It's a little bit too deep. Okay, I don't like that. Or buying into wide range red bars. I don't like that. Why? Well, guys, really, on a higher time frame, what are these 4 or 5 red bars? It's just one big red bar, right? If you look at the angle of retracement here on this last pivot, last pullback, sorry. If you take those 4, 5, 6 bars, if you go to a high enough time frame, 15, 30 minutes, it's just going to be one red bar. And that one red bar is going to be straight down like this one green bar. Well, that angle is very steep. Don't buy into steep, deep retracements. Okay, now, again, if you're talking about a triple bottom, you're talking about a climactic move, you're talking about a wide range ending bar on volume, that's a different conversation. We are talking about a stage 2 uptrend. That's the conversation we're having. So don't change the conversation like this is a climactic. Okay? So that's why you don't buy into wide range red bars, especially with deep retracements, because the level and depth of penetration is indicative of what's going to happen next. And the deeper and steeper that is, the less likely you're going to bounce. And if and when you bounce, you're going to bounce shallow and put in a lower high and continue the move down. That was a mouthful, but I hope you got it because it was profound. Okay? Don't buy into steep retracements. Don't buy into wide range red bars. And one more time for the third time. I'm not talking about climactics. I'm not talking about triple bottoms here. Okay? We're talking about stage 2 uptrends. Okay? Very important chart this is. Because you guys find yourselves doing these things on the last 2 or 3 pullbacks. You find yourselves doing this. You should also be considerate of this if you're looking to manage out your position on pivots. Now you might want to start going and saying, you know what? I need to start raising my stop loss now, or drilling down to a lower time frame pivot because demand is waning here. Supply is increasing. Okay? How do we do it? Like this. We saw this chart last week. I'm not going to spend any time on it this week. None. We saw it last week. How bars form matters. I want to know how that bar formed. That's where you drill down to a lower time frame. Drill down to the 1 minute or 2 minutes, see how that 5 minute formed. And you're doing that inside of the trend to get a better indication, an earlier indication of what's about to happen. Okay? Now, same idea. On the left, 5 minute momentum move. We have a little bit of a wedge, if you will, right? A little bit of a flag, a little bit of a wedge. We have lower highs and higher lows, right? And for those of you that are not sure what a wedge is, you should, but let's just take a look. So if I drew this like that, pull this over here, and I draw this like this, that's your wedge, okay? Roughly. We have higher lows, lower highs and higher lows, okay? That's your wedge. We break out of that wedge. But here's the rub. We get this all the time. In fact, somebody asked the question right before the lecture started. Damn it, stock's gone. Okay, that happens. I agree, and sometimes there is no re-entry. But what if you drill down? What do you have here? A little bit, it's a little sloppy, but you have a little bit of another flag wedge on a 1 minute. Okay, so that over here, if we take this, we're somewhere around here, now we're getting this kind of stuff. And if we take this, I don't know exactly where it is, but right in that range. This is how you're going to get on board a momentum move. You're going to drill down to a 1 minute and find an entry. Find a 3-bar play, find a little pivot, find a small entry area. Guys, you know what I did today on MRNA? I should have put it in here. I apologize. You note, we got in at 136.60. We did not get in at 137.30. 137.30 was the 2 minute 3-bar play. I got in on a little pullback on a 1 minute chart at 136.60 with a bottoming tail. Had two bottoming tails, and I thought this thing's going to go higher. Might as well get in sooner, right? So over here you have a little 1 minute breakout, okay? And over here you have that, right before that little breakout, you have this little kind of a wedge, a little sloppy. But you're trying to jump in a momentum move. That's the key here. And this is where, again, bar by bar, will be very helpful, and drilling down to lower time frames will be helpful. So today we have basically looked at overall trends, higher, lower, sideways, combine the overall trend with bar by bar analysis to get a earlier understanding of what's going to happen next. And we've also used that bar by bar within the trend to find entries on stocks that otherwise would not have given us entries. Okay? Now, I'm not going to spend as much time here because I could spend an hour just on this slide. Pivots are a reference point where there was a battle and a shift between the forces of supply and demand. Guys, supply and demand just simply means buyers and sellers. In this case, supply is sellers and demand are buyers. So don't, it's just a fancy word to say it, okay? So they're a reference point. That's where it was a battle that took place there. And one side won and another side lost. You know this by the direction in which it went, okay? Pivots begin with a higher low bars on both sides of a bar or with lower high bars on both sides. Right? They either pull back with lower highs or they go up with higher lows. Okay? It depends if it's a buy setup or a sell setup. Okay? Thanks, Ilias. Thank you very much for rubbing that in. We appreciate that. All right? Despite this, while forming, one more time, while forming, we don't know if it will become a significant pivot or a reference point until after it has formed. Why? Because there are plenty of stocks that pull back, put in a bottoming tail, and go one bar higher and then fail. Well, that's not going to be a significant pivot because it never broke the prior pivot high. Right? It doesn't become significant until it breaks the prior pivot high or prior pivot low in a downtrend. Okay? Pivots are not all the same. Guys, real quick. Gosh, sometimes I wish we had Neuralinks. 99.9% of the time, I would never want a Neuralink because you don't want to know what's inside my head. It would scare you, okay? But this is the one time I wish we did because in my mind, I have something that's so clear right now in my head. But some of you are struggling to grasp it. Let me explain why. You're struggling to grasp some of the concepts we're talking about because I don't have a picture of them, right? We're visual people. But in my mind, I've already drawn the picture. I know what the chart looks like. So when I am telling you, despite this, while forming, we don't know if it will become a significant pivot or not, reference point, higher low bars, lower high bars, blah, 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 blah. In my mind, I'm drawing the picture as I'm reading it. The question is, are you drawing the picture as I'm saying it? That's when you know you've reached that level of unconscious competence. When you can draw the picture as I'm saying the words. And I do this occasionally with you guys when I see a bar in the chat room and we're looking at a chart and I go, what's it look like on a lower time frame? What's it probably look like? And you should be able to tell me. That's when you know you're getting to that mastery level. So when I look at this and I say pivots are not all the same, they have varying levels of significance. And I think deeper versus shallow, visual representation in my head. Do you have one? Volume in the pivot. Do you have one? Where the pivot is forming. Is it pivoting? Is it forming at a triple top? Is it forming at maybe a double top, but that double top's a daily double top, not a 2-minute double top? Is it forming in the middle of nowhere? Is it forming at minor price support? Is it forming near a trend line or a moving average? Is it forming with market conditions in your favor? The conditions in which the pivot formed, market, daily chart of stock, etc., matter greatly. So in your mind, you should be drawing pictures right now of all the significant pivots and how they look, as well as insignificant pivots and how they look, failed pivots and how they look. And I know what you're thinking. Why wouldn't you just give us a visual representation? Because I was too lazy to yesterday, and I had stuff to do, and I didn't feel like spending another 30 to 40 minutes looking for charts to represent that. That's why. That's the honest answer. So, pivots and trends. The angle of the trend, the angle of the correction, which means the pullback. Okay, the overall trend quality, overlapping bars, sequential bars, 50% retracement, 80% retracement. What is it? What's the overall quality of that trend? The distance between current and prior pivots. Remember, we looked at that last chart and we saw the angle getting steeper. We saw the higher highs getting weaker. They were less significant higher highs. That's the distance between current and prior pivots. The time versus price corrections. All right. So is this a pullback with a V bottom? Is it a pullback with a square bottom? Is it just a breakout versus a pullback? And if so, where? What's the quality of that pullback? What's the quality of that consolidation? Understand the trend. Bear candles and uptrends are usually resting, not trend changing. Know the trend you're in. Let me repeat this one because it's important. Bearish candles in uptrends are usually resting periods, not trend changing. We're not talking about a wide range turnaround bar. We're not talking about a trend that's climactic. We're talking about a nice quality stage 2 uptrend that's not extended, hasn't exceeded its average trading range. And if you see a red bar come in, it's just because the stock needs a break. It doesn't mean the trend's changing. I say it all the time to you guys. I said it yesterday with Tesla, Nvidia the other day. We said, if this stock pulls back, there's nothing wrong with a pullback. It's extended and needs a break. Some people go nuts. A stock's up 1.5 R, green bar, green bar, green bar, green bar, green bar, and a red bar comes like, oh, it's over, it's done. Oh, it's finished. No, it's not. It just needs a rest, right? You can't run 92 miles without taking a break. Doesn't mean that you're weak. It doesn't mean you can't run the 92 miles. It just means you need a break before you get there. Stocks are the same way. Why am I telling you this? Because it should have a profound impact on your emotions and psychology when you know what it should be happening. See, there's a difference between what you want to happen and what should be happening. You see, when we get into a trade, let's be honest, we all want the trade to just go straight to our 2R target, right? Am I wrong? Of course we do. We want it to go there as quick as possible. If it can get there in 12 seconds, I'd rather get there in 12 seconds than 12 minutes or an hour and 20 minutes. But that doesn't mean the stock should do that. And if the stock doesn't do that, it doesn't mean it's weak and it doesn't mean it won't get to your target. Why am I saying this? I'm saying it because I want you guys to take a step back when you're in the middle of a trade and have mindfulness and objectivity to where you sit there and go, you know what? This pullback is absolutely appropriate. In fact, I almost prefer the pullback because it means there's a better chance it'll get to my ultimate target because it's what it should be doing and it needed that break. That's a trader who's mastered their mindset because they're allowing the chart to speak to them and they're no longer speaking to it. Okay? Things to remember. Every deep retracement creates void, but is it clean? Overlap creates void, but it's not good void because it's overlap. The smoother the pullback, the smoother the move back up. The deeper the move into supply or demand, the greater the odds of getting through it. An 80 or 90% retracement has a great chance of breaking below that prior pivot. If it's a 20% retracement, the odds of it breaking through that pivot are much less significant. Candle quality matters, choppy versus sloppy. This also indicates the level of certainty, right? Overlapping is less certainty. Smooth moves, more certainty. Understanding where you are in the trend is a major key to successful trading. Buying too early or too late will usually get you stopped out. Never trade a trade. Never trade a trade. Never take a trade. That's probably what I should say. I like that better. Let's change that. Never take a trade, okay, without a clear trend, clear void, and checking the market. That's all I got for you today. I'll be honest with you guys, and I don't mean this to come across in any way of arrogance whatsoever, so please don't take it that way. There are lectures I do that I think are great. There are lectures I do that I think aren't that great, and there are some that are in the middle. Today's was an important lecture. I'll leave it at that without stroking myself. Today's was an important lecture, and I hope that you took it that way because there's more we can dig into than the 10, 12 slides we went through today, but we went granular in each slide. And if you can find a way to better understand the trend you're in, use bar-by-bar analysis, use multiple time frames, use mindfulness and controlling emotions to better understand when you should be in, when you should be out, and if you are in, to relax. There are times you should be nervous and worried. I'm not joking. There are times when it pulls back and you're like, you know what? That's not what's supposed to happen there. That's a concern. But if something's supposed to be happening, forget about your emotions. The stock's doing what it should do, and that's all you can ever ask of it. So I hope you guys learned a little bit about trend analysis. I'm Jared Wesley of Live Traders. We'll get back at it again next week.